Good morning. Welcome to Trading Hour. It's a Friday morning. I'm Reema Tendulkar. With me is Surbhi Upadhyay. Markets are ho-hum, but we've got the Friday feeling, right?
No, absolutely. I know. Had it been any other day, I think there would have been a bigger sulk over HDFC Bank, which is still there.
It's there, but...
It's there. I mean, that stock's been down almost, I think, it's still down about 4% or so. And that's basically one of the problem areas that we'll talk about. And that's entirely because of the update that's come in from the first quarter. And maybe, Reema, I mean, the market kind of had an inkling of this because, it didn't rally too much after the FPI news as well, right?
So it rallied Monday to Wednesday, but between yesterday and today, HDFC Bank has lost nearly 6%. You know, the question is only now whether this technical factor, the passive inflows, which are expected in August, will provide a bit of a downside support, some cushion at lower levels. But today, as you can see, it's been a big slam dunk. Stock is down close to about 4%. But for the markets per se, at the index level, we're holding up pretty okay. The Nifty, in fact, is still up 1% for the week. And Surbhi, this sets us on course to end higher for the 5th consecutive week. So 5 weeks of, gains for our markets. Today, what's batting? It's the CPSE index. So the Nifty CPSE index is up 1.3%. And once again, it's the shipbuilding stocks which are rallying over there. Cochin Shipyard, Garden Reach Shipbuilding, Mazgaon Docks. And I want to pull up a, Rajnath Singh tweet, which, he put out just earlier this morning, about an hour back. He's saying the Make in India is crossing new milestones year after year. India has registered the highest ever growth in value of defense production last year in FY24, and the value of defense production has hit 1.26 lakh crore last year, which is a jump of 16.8%. So defense production is surging, and that's also adding on to the kind of order books that we're seeing and the kind of execution. Apart from that, pharma is also having a good session. The Nifty Pharma Index surging for the 6th day in a row. The index is up 3.5% this week. So that's surreptitiously. Many of these healthcare stocks are moving up. And of course, on the way down, it's HDFC Bank.
Absolutely, it is. On the broader market, actually, things are not that bad. In fact, the Midcap Index is managing some green. It's outperforming what we're seeing on the large cap screen. And the advance decline ratio is still quite healthy. You've got over 1,400 stocks advancing, just about 900 stocks declining. So the mid-cap screen is not bad at all, is the short point. And there are stocks today moving on news. Apart from PSUs, shipbuilders, or let's say stocks like, by the way, BEML is now pushing a 14% sort of a gain. RBNL is up about 7%. So the PSU theme is alive and kicking. That's point number one. But beyond PSUs, there are some other newsmakers. I just want to call out 2 stocks in particular. Those are all the PSUs on your screen. Look at Raymond. Now, in Raymond, the news is that they're looking at a demerger of their real estate business. So the stock is reacting to that. About a 16-17% up move underway over there. And then there is Ixigo. We spoke with the management a while back. They came out with numbers. First time that they've reported numbers after listing. So that stock is really a high flyer, 6-7% higher on the back of the results that they've posted in the commentary that you heard here on the channel earlier. So short point, mid-cap market's okay. Stocks reacting quite favorably to some of those news points. But let us start with the one that's not reacting favorably because the news is not favorable, and that is HDFC Bank. The bank obviously came out with its Q1 update. Abhishek is here with more details. Abhishek, I guess there's absolutely no growth, right, on deposits or even on loans?
Well, if you take a look, even the system deposits, that's down 1.65% year to date for the banking sector as a whole, and HDFC Bank stands no exception to it. So to begin with, CASA has declined and is declined higher than expectations, and LCR, however, has improved. So the focus of the bank has been improving their CD ratio as well. So deposits are down 0.03% quarter on quarter. If you take a look, system deposits are down 1.65%. As of 14th June, when compared to the number that was there at the end of FY24. CASA in absolute value has declined by 5% quarter on quarter. Q1 FY24 also saw CASA decline by 2.75% sequentially. So Q1 is a seasonal in nature with respect to CASA decline, and this time it's been on the higher side on account of the fact that many people are shifting their low-cost deposit, that is savings account, to term deposits as as well. And we had the general elections which actually impacted the current account of many banks as well. CASA ratio dipped by nearly 200 basis points on a sequential basis. Advances have declined by 0.8% sequentially. Now the management has gone cautious with respect to other wholesale advances which declined in the previous quarter as well, and it declined this time around as well by 26,600 crores as the yield or the interest rate have not been favorable to them. A credit deposit ratio of the bank was at 104.5% when compared to 105.4%. Now it's good to see that liquidity coverage ratio improved to 123% versus 115% in the previous quarter, and this was one of the major concern after the Q3 numbers that had come out when it was around 104%. Brokerages largely they remain bullish on the stock. They say that deposit accretion was weaker than expectation, high rundown seen in the current account, and credit deposit ratio was flat on a sequential basis. So Nomura is the only bearish analyst on street with respect to their target being at 1660 per share and neutral rating, while all others Bernstein, CLSA, Morgan Stanley and Jefferies remain bullish on the stock with a target price ranging from 1,725 per share to as high as 2,100 per share. Back to you.
Thank you very much for that. But Abhishek, RBL Bank is also under pressure post the Q1 numbers. Tell us more about that.
Well, deposits have shrunk massively for them, so it's a 2% decline on a sequential basis with respect to deposits. And as I explained, 1.65% has been the system deposit decline so far. So deposit shrunk has not gone down well with the street, and CASA in absolute value is down 9.5% quarter on quarter. So the CASA ratio is at 13-quarter low at 32.5% versus 37.3% in the same quarter last year, and about 35.2% in the previous quarter. Healthy loan growth at about 18.3% YOY and about 3.3% sequentially. So decline in deposits and growth in advances have meant that the credit deposit ratio has shot up to 87.3% versus 82.75% in the previous quarter, and this augurs well with respect to net interest margin of the bank. Liquidity coverage ratio is at 137% versus 129% YOY and about 140% sequentially. Back to you.
All right, Abhishek, got it. Thank you very much. So those are all the important updates coming in from the banking space. Let's move on now. Shilpa Medicare has been zooming higher in trade, and that's because one of the company's CDMO customers reported positive results from clinical trials of a new molecule, and this is a molecule that could potentially help in treatment of chronic kidney disease. Vivek is here with the details. Vivek, that's 14%. That's a serious move. So I guess this is potentially an important drug.
Well, you're absolutely right. So very, significant development coming in as far as Shilpa Medicare is concerned. So last evening, they've updated the exchanges about one of the customers for which, Shilpa Medicare offers CDMO services. Now, CDMO, of course, is Contract Development and Manufacturing Organization services that Shilpa Medicare gives to the innovator company. In this case, the innovator company is a company called Unisive Therapeutics. So what has actually happened is that this particular company, Unisive, has gone ahead and reported positive results from a pivotal clinical trial for a drug known as OLC. Now, this particular drug is used in the treatment of certain side effects that come during the treatment of chronic kidney disease patients. And this particular entity is a NCE, which is a new chemical entity. So what does Shilpa Medicare stand to gain from this particular development? Number one, the company is a partner to provide end-to-end CDMO services. Along with that, the company will be doing development and supply of APIs, which is the active pharmaceutical ingredient as well, to the finished dosage form. So one more stream of business line income that Shilpa Medicare gets. So along with that, the company has already entered into a long-term manufacturing and supply agreement with the innovator company that has gone ahead and is doing these particular clinical trials. So number one, the innovator company has already placed a binding purchase order for supply of OLC tablets, and this particular order was done by June 30th, 2025. Along with that, there will be additional tablets that this particular company will be placing orders for. This will be done between December 31st, 2025 and June 30th, 2026. Not only that, Shilpa Medicare also stands to gain a one-time milestone income of close to $10 million. This particular milestone will be spanning over filing, approval, as well as launch of the product. So significant positive development coming in for Shilpa Medicare. No wonder, like you mentioned, the stock is zooming in the session.
Okay, what about Ircon? That's also surging. It's a fairly large 750 crore order win. that it's won in a joint venture format. Tell us more about this.
Well, you're right. So Ircon, what's actually happened is that, remember, Ircon and all of the other railway PSUs at this point of time, no longer do they get, orders directly from the government. They have to go in for a competitive bidding process. And Ircon, in this particular JV that it is part of, where Ircon has 65% of the stake, in a competitively bid process, they have received an order from RBL, which was the entity that was conducting the bids. The total size of the order is 750 crores. So Ircon will get 65% of that. What is this particular order pertaining to? It's installation of broad gauge ballotless track in Uttarakhand. And this particular JV is between Ircon, Paras Railtech Private Limited and PCM Stresscon. Important development coming in, one more order win as far as, the railway PSU is concerned. No wonder this stock too is doing quite well.
All right, got it. Vivek, thank you very much. So lots of stocks buzzing around in news, and that order win is definitely helping the duo, Ircon as well as RBNL. Let's take a break. We'll come back on the other side with the latest in the commodity markets. Manisha Gupta will join in. Welcome back. As promised, let's tell you about the latest news coming in from the commodity markets. Now we have Manisha, and she's focusing on copper today. So what's the buzz here, Manisha?
Well, this is a commodity that has been inching higher. If you look at on a quarterly basis, on this year until now, we are looking at very strong positive cues coming in from copper. Of course, we did see an all-time high of $11,100 a ton in the month of May. June did see some profit taking, even some consolidation, but July again has started on a very positive note. So when you talk about this week itself, the first week of July, we are up by 4% in case of copper. It's trading at a 2-week highs right now, and the markets also are looking at very strong gains going forward as well. If you look at the LME inventories, well, that posed a bit of a bearish picture because we've seen inventories gain constantly since the month of May, standing quite tall. The Chinese inventories, though, have declined for 3 straight weeks right now, and that perhaps is a supportive factor there. But it is all about the future demand that seems to be making its way in case of current prices right now. If you look at the TC numbers, those have continued to decline. There's a report from Citi which says that they are anticipating copper prices to hit $9,500 a ton within this quarter itself, and then they're anticipating an all-time high in copper in the last quarter of this year or the first quarter of 2025. A very interesting report also coming in from SMM, where they say that as they look at the second half of this year and the first half of 2025, they are also looking at very strong copper demand to come back into the markets from EV, from construction, from infrastructure as sectors as well. And they also are anticipating a deficit of 500,000 ton in 2025, and the market's clearly taking that all in prices right now.
Thank you very much for that. Get into a break. On the other side, we'll discuss market technicals. Mitesh Thakkar will join in on the other side. Welcome back. HDFC Bank has now moved to the day's low. It's a 4.5% cut. And after that, you've got Titan Industries with an over 2% fall. Today, Kotak has downgraded Titan Industries to a reduce from an add. Their target price now stands at 3,075, which is a good 200 rupee lower than the current market price. They're saying the risk reward is currently unfavorable. There are external headwinds, competitive intensity that's likely to exacerbate with the launch of Aditya Birla Group's novel jewels and direct or indirect impact of lab-grown diamonds on their studded growth and profitability. Kotak says we admire their execution, but given the valuations, the risk reward right now is unfavorable. Reduced rating by Kotak, target price 3,075. Titan has been a big drag, not just today, this week it's down more than 4%. But Mitesh is now with us for a quick technical check on the markets. Mitesh, morning, what have you made so far? The fall in HDFC Bank, the little bit of a pickup, the momentum seen in pharmaceutical names, anything that catches your attention?
Morning, Nima. Actually, it's pharma all the way, with the disclaimer that I have a lot of trading positions in pharma stocks. I think very clearly that's the sector which is giving a big breakout, and that's where the momentum is. So while the market, I maintain my view that if we don't break 24, 150, 100 zone, then we might just go into a sideways consolidation and come out of this overbought situation. The idea is that we will keep looking for sectors where breakouts are happening, and you rightly highlighted pharma is the one. I have a buy on Cipla. Keep a stop at about 1490. Look for targets for 1560. And EVs, that's a buy with a stop at about 4585 for targets of 4750. And as I said, disclaimer, I don't have positions in Cipla and EVs, but I have positions in other pharma stocks.
Okay, all right, got that. So it is pharma all the way for Mitesh. Mitesh, thanks very much for getting us the latest there. We'll come back to you for some more trading ideas. Okay, it's time now to talk autos. We have an exclusive story lined up for you. Sources are telling us that the Mahindra Group as well as Volkswagen may elevate their partnership to a joint venture. That could be a big one. We've got Parikshit joining in with the details. Parikshit, great to have you on the show. I believe you're in Pune. That's for a different event. It's for the Bajaj bike launch, right? But also keeping an eye on M&M.
Yes, this is the Auto Hub. Pune is the Auto Hub, so why not keep an eye on other events also taking place? So when we speak about the Mahindra Group and Volkswagen talks, this seems to be moving in the right direction, and we believe that talks have reached an advanced stage as well. Now, VW was earlier in talks with the JSW Group for a 50-50 joint venture, but we believe that those talks did not go forward. Volkswagen has shown an intention to go ahead with the partner, that is Mahindra Group, with whom they had signed a strategic partnership agreement, a term sheet in 2022. Now, this was for the supply of battery cells, unified cells that is, and components, electric vehicle components for Mahindra Group's Inglo platform. So the future electric cars of the Mahindra Group are going to be using those components and unified cells from Volkswagen. Now, when that term sheet was signed, they had said that both companies will look at joint projects in future together, building manufacturing cells as well, and other opportunities. So they had kept the option of partnering more closely in future. Now we believe that both the companies are looking at a joint venture where they could jointly develop and produce electric cars for the India market and also for exports. The Mahindra Group did not respond to CNBC-TV18's query at all. At the same time, JSW Group did not respond to any queries. The Skoda Group has gone on record to say that India is a very crucial market for them. It is a market of strategic importance from where they feel that their exports will also increase. They also see the electric vehicle penetration increasing anywhere between 15 to 30% in the next few years. Given that, they are open to evaluating opportunities for the India market, and they are not going to comment on these reports of this joint venture. We've been told that yes, the Skoda Group, which handles Volkswagen India's operations, is actually looking and evaluating the possibility of having an India partner on board, and Mahindra Group may be the right bet going forward. Skoda has also said that they're not looking to exit India at all. They are very much committed, but having the option of partnering with some big Indian OEM may benefit them for the future. So both companies are evaluating them and holding talks. And those talks, we believe, are at an advanced stage. And they're also looking not just in producing electric vehicles together, but also cell manufacturing.
Okay, Parikshit, but there's some exciting news for auto enthusiasts, particularly bikers. Bajaj Auto is all set to launch the world's first CNG bike today. You're at the launch event. Tell us more.
Well, this is going to be a big disruptor, according to the Bajaj Auto Group. They have been working on the CNG motorcycle for the last 2 to 3 years. And Nitin Gadkari today, someone who's a big proponent of alternate fuels, is going to be here to launch that vehicle. Now, in terms of the pricing, we hear that Bajaj Auto would like to keep it very competitive. It could be anywhere between 80 to 90,000 rupees, marginally higher than the petrol version of a 125cc motorcycle. This is a completely ground up new platform, new product that has been developed by the company for the value conscious consumer. So they're targeting someone with a salary bracket of 40 to 50,000 rupees per month. This motorcycle will have a toggle switch which allows you to move flexibly between a CNG tank and a fuel tank as well. So this gives you two options, and it will allow you to drive your motorcycle over longer distances as well. We've accessed some exclusive pictures which show that it has a round LED headlamp, a very bright blue theme as a color, which will be one of the color themes. It also has a long seat as well, and there are two tanks in the vehicle, one for CNG and one for petrol. We are also hearing that the exports of this vehicle will also take place, maybe to 5 to 6 geographies, initially to Egypt and Bangladesh maybe. The first launch of the vehicle may be for Maharashtra, and slowly they would like to expand it all across the country. Now, in terms of the success of the vehicle, if this vehicle is successful, then Bajaj Auto would definitely like to have a full portfolio of CNG motorcycles. And Rajiv Bajaj had even once said that they would like to deploy it across their product segments. So they have a very ambitious CNG program going here. There is no such competitor in the India market. CNG sales have actually grown 33% year on year between January to June this year. So there is a big opportunity there that Bajaj Auto feels. And if it's successful, they feel that it could be a disruptor in the entry-level segment where Hero MotoCorp is a market leader.
This is potentially a huge moment, and when we talk about the battle for the bike, especially in the entry-level segment, right, Parikshit? You know, before we play out Mr. Rajiv Bajaj's soundbite on the issue, I just want to get your perspective. You've been tracking this for so long, and I think this is not just India's first CNG bike. Maybe I think it's the first global such product, right? Now, in an era where everyone's talking about EV transition, here comes a CNG bike looking at a completely different, cycle of disruption. Very quickly, 30 seconds, how you look at it, and then we'll play out what Mr. Rajiv Bajaj has to say.
Well, this could be extremely important. There are at least 6 or 7 geographies that Bajaj Auto is closely looking at which have a significant CNG penetration. Look at India itself. CNG is such a popular fuel. According to ratings agency ICRA, they believe that the CNG penetration in India could increase to 18% by 2027, and it could become the second most popular powertrain in the country. Having said that, this is a big untouched opportunity, so to say, and if it's successful, then it really gives Bajaj Auto the first mover advantage. And you're right, there is no CNG motorcycle in the world. Bajaj Auto will be the first, and it also gives them an opportunity to further increase their export footprint. Currently, you have an entire ICE portfolio that Bajaj Auto and other OEMs from India export. There are EVs which are exported as well. CNG would give Bajaj Auto an extra segment to export globally to 5 to 6 key markets, and maybe more depending on the CNG penetration. But for India, definitely it is a compelling proposition for the consumer, because it will bring down the average fuel cost and the running cost for him as well. And CNG is something that everyone is well aware of. There is no range anxiety that you would have with EV. Where do you charge? How do you keep? How will it perform in the rains? So you know that CNG has been in the country for many years. There is a good enough CNG penetration. The government has a plan of expanding the CNG fuel pumps very aggressively by 2030. So in terms of noises, CNG as an ecosystem is all set to stay. It will only grow further. The penetration of CNG three-wheelers, buses will grow, and possibly the two-wheeler segment could also grow as well. Currently, there are no CNG two-wheeler sales in the Vahan data. So therefore, there is any growth that the Bajaj Auto Group sees over here will only be good for the company and the auto industry altogether.
Within the calendar year 25, we hope to be the first in the world to launch such a motorcycle. But today I'm going to tell you, we are so encouraged by the results we've seen from the testing that we are actually able to prepone that by a whole year. So within this calendar year 24, in the very near future.
That was Mr. Bajaj talking to us earlier. Thank you very much, Parikshit, for that comprehensive coverage. And you've got a busy day. You've got this potential JV in the making between M&M and Volkswagen. Then you have this really high-profile event. And it's quite momentous for the reasons we discussed. So make sure you're hydrated and get in some food. And we'll touch base with you once the launch event happens. I think that's around 1:30. Thanks very much for joining in right now. Quick break. At this point in time, come back with market fundamentals. We'll have Amit Khurana from Dolat Capital joining in. Welcome back. We're going back and looking at the market, which for today is having a bit of a consolidation day continue. Amit Khurana of Dolat Capital is with us now to talk about the road ahead. Amit, good to have you on the show. It's almost become a habit, right? New highs on a daily basis. So it's good to actually see some quiet days and some consolidation. But really, I mean, how are you looking at the overall construct and the setup right now? We're running into earnings season. Expectations are high, and so is the market.
Well, yeah, I mean, you get days of consolidation, which in a way become pseudo corrections in the bull market. I mean, one wishes there were some corrections across, the wider section of the market, but that doesn't seem to be the case. And we were expecting some correction to play out, but it doesn't seem to be in the offing. And every intraday dip is being bought into. If you look at the earnings perspective, I think earnings will be probably, one of the better ones. The larger trajectory seems to be pretty supportive, and therefore that has been one of the reasons that the market has kept sort of pretty strong levels, so to say. Whether we will get upgrades in the earnings, I think it's early days to talk about it, especially some of the critical sectors, whether they'll be giving it enough fillip to get an earnings upgrade and justifying this kind of a move. But largely, our narrative is that bottoms up is the way to go about the second half of the calendar year. I think the index returns, even on FY26, now seem to be in the fair sort of zone. And any meaningful upsides from here over the next 3 to 6 months look pretty, challenging and difficult to justify. I mean, we're ballpark looking at about 1280 to 1300 rupees of EPS FY26 numbers. So you're looking at almost 18, 19 odd times, which is not too expensive, but definitely not cheap from an entry point of view. So bottoms up, sector rotation, and more of a tactical plays is how we are positioning on the market, and building in muted returns on the Nifty for the next the remaining part of the calendar.
Amit, I was reading the latest note from Dolat Capital you all have done. You've gone back and looked at the historical numbers, and you've said that we haven't seen a 10% plus correction in the market since July of 2022. That's 24 months in counting, and we haven't seen a significant fall in our markets. And you also go on to say that the Indian equity valuation remains expensive versus bonds, and that also perhaps explains the FPI action. Now, even Indian debt bonds are available, and that is an attractive option for them. But let's get to the specific sectoral calls and the portfolio recommendations that you have. I want to start with banking. On the whole, you're neutral on banks, but you like Kotak Mahindra Bank, where there is that regulatory overhang. And the other one is HDFC Bank, where fundamentally they appear to be struggling, particularly on the deposit front. The dip that we're seeing, is it a buying opportunity? And what explains this rally from 1450 to that 1700 that we saw in the recent past?
That was clearly a tactical rally because of the expectations of MSCI weightage revisions and potential headroom for fresh buying. And I think that largely played out. But I think the predominant theme there has been the performance, which again has been short of expectations. And I think the challenge for HDFC as a franchise continues to be getting the deposits in place. And unless they can get that act together, it's difficult to sort of build in very, very big upgrades on earnings. The market has been expecting that ever since the merger got announced, but that has not been the case, and therefore the level of de-rating. But all said and done, I think fundamentally the franchise remains pretty strong, and eventually we expect it to catch up. And same play for Kotak. I think these are two banks which have largely underperformed the banking space. You've seen significant amount of re-rating in all the other franchises, and our take was largely driven by the fact that they will catch up on their performance. Unfortunately, the earlier reports on the pre-earnings reports doesn't seem to be supporting that hypothesis, but we remain aligned to our thought process that over the next 12 to 18 months, they will catch up on their performance. So that's the so I think it's more of a neutral mode because of the fact that most of the other franchises have sort of got re-rated very materially, and therefore we took a step back and went positive to neutral.
Okay. Amit, we want to get Dolat Capital's view on discretionary consumption. So I'll allow you to sort of gather your thoughts for a minute or two, because that's one pocket that's been the strongest in the market, right? And now the debate is whether the tilt is going to move towards staples, to rural consumption. We've started getting the update. So I thought this is a good time to actually bring in Mangalam as well, because the Q1 update, for instance, for Kalyan is out. And I think the number is still 27% growth, Mangalam. So not bad, but if memory serves me right, is the pace of growth slowing?
The pace of growth is not slowing, largely because, one, you have to look at the base as well. So last year it was on a feeble base, so you saw growth out there. And secondly, the first quarter for gold, etc., seasonally it's a strong quarter, but this time around there was no major festive season or wedding season as well. That has been shifted to the second quarter. So if you adjust for that, 27% revenue growth on a high base without any seasonality is actually quite a good performance. And not just that, if you look at the India growth, which is coming at around 29%, bulk of the company's business comes in from India. So that is even better. That's led by same-store sales growth of around 12% odd. Add to that, the company has been on a strong expansion spree. So they've been, adding franchise-owned stores. So 13 is the number of stores that they added in India this time around as well in the first quarter. To add to all of that, Middle East, which is about 15% of their business, has shown about 16% growth, and as a result of which the overall revenue growth has moderated to 27% as against India, which is 29% as well. The stock has rallied over 200%, 230% in the last 12 months or so, and as a result of which maybe the move in today's trading session is not as exacerbated as the first quarter update is. If you look at the quarter ahead, the second quarter, you'll have all the festive season starting, maybe something like, Onam, and at the same time, you'll have the wedding season coming by as well. So with increasing gold prices and the company increasing their stores, the growth pathway for Kalyan Jewellers and all the other jewelry players is also pretty high. So now it's just a question of valuation as to what you ascribe to either Titan, Kalyan, or something like a Senco as well. We had that Motilal Oswal report earlier saying that the formalization towards branded players and national players has increased in this space. So there is a fair amount of growth runway for all these companies.
No, fair enough, absolutely. And I take your point on board that, that India number for Kalyan at 29% is not bad at all. Senco has gotten into a habit of doing 30-31% as well. So let's see how they perform in the first quarter. Thanks very much. That's very helpful. Let's take that back to Amit now. Amit, so that's the question, right? Do you still keep playing discretionary consumption? If yes, do the jewelers still make the cut? Do the valuations still leave something on the table?
Well, that's the challenge. I think Titan is one stock which we cover in the sector, very richly valued. We like that structural basis, but near term, we believe there is some time of consolidation. And notably, in our channel checks, we are finding the local players now far better competitive versus Titan. So Tanishq is facing its own challenges in terms of trying to manage this local competition. But it doesn't take away the fact that India is a large market, and over a period of time, these valuations will get justified. But if you ask me over the next few, let's say, couple of quarters, we are keeping our hands off gold as a segment, gold jewelry as a segment. We are playing the other pockets where there is probably better evidence to build a case for better performance. For example, staples we feel should do relatively better off. Retail and apparel should do relatively better off because rural incomes seem to have seen the worst and real wages are beginning to move up. And so is inflationary expectation beginning to top up. These are RBI surveys, so we give it better authenticity. So our sense is that some of these discretionary sort of plays will probably have a better performance and better environment to play around. Remember, last 2 years, the rural has been taken a big dent because of high inflation in 22 and then bad monsoon in 23. And there's a lot of hopefully pent-up demand once the cash flows start improving because of real wages and also because of the better monsoon that we're witnessing. So hopefully over the next few quarters, you will see a better wallet spending on the rural side, and that will have its own positive impact on some of these categories, which we feel more confident about.
Amit, the big change in the last 1 week or fortnight has been the rise in crude prices. I think crude prices have inched up 6-7% in a span of 1 month. What does this mean for oil marketing companies? I know you're negative on oil marketing countries. It's not, none of them feature in your top picks. But what's the construct looking now? And what do you like in the energy basket?
So we're playing more of the CNG story. It's been a contrarian call, and I think that has been largely led by one of the valuations are extremely attractive. Some of these franchises have free cash flow yields at 5% plus, dividend yields at around 4.5%, and valuations are building too much of pessimism because of this EV theme, capturing the overall market share. One doesn't deny the fact that there will be some dent on some of the categories on the auto space because of transition to EV. But I think the larger narrative for India still continues to be pretty supportive of CNG as a space. So versus the OMCs, which we did play last year, wherein the pricing environment was far more supportive, and there was obviously much better profitability from some of these franchises. We are avoiding the OMCs at this stage. But it doesn't get triggered by the near-term price variation on the crude side. I think it's one-off. I don't think it is structural. And if it does tend to be structural and let's say a 3-digit read on the crude prices will definitely have a negative impact on the OMCs. But our take is more driven by the fact that they have seen their peak profitability, peak margins. And from here onwards, we find the risk-reward much better aligned for CNG as a segment to play on the energy basket.
Thank you very much for that. We will slip into a very short break. We'll come back and talk more about banks. HDFC Bank is the biggest loser today. On the other side, we'll invite Nitin Agrawal from Motilal Oswal Financial Services. Stay tuned. Welcome back. The stock of the day on the way down is HDFC Bank. Undoubtedly, the street is disappointed with the Q1 update. And considering that in the last few months, the stock had rallied from levels of 1450 all the way to 750, it's retraced in the last 2 days. Yesterday too, perhaps markets got a whiff of the Q1 update. It's going to be soft. It sold off 2.5%, and today it's seen another 4% plus fall. To talk more about the financial sector, what we should expect in Q1, we now have with us Nitin Agrawal from Motilal Oswal Financial Services. Nitin, thank you very much for joining in on the right day. First, tell us about HDFC Bank. Even Q4 was disappointing, and now this looks like another weak print. Is this tracking lower than your own estimates?
Yes, hi, good morning. So yes, HDFC Bank has reported a weak business update. And while all eyes were on deposits, because lending, we all have been building in some moderation, given the compulsions that the bank has around CD ratio. But with deposit base holding flat, that has come in as a slight negative surprise. Because while 1Q is a seasonally a weak quarter, and we did see a very strong fourth quarter from the bank with a very strong built-up on even the current accounts. So some of which has unwound this quarter. So that has led to this impact. But the general expectation was still around some bit growth on the deposits, which hasn't really come through, and that caused this negative reaction on the stock.
But HDFC Bank has completely given up that MSCI related pop that it had at the beginning of the week. So week to date, HDFC Bank is now lower. It's down 1.5% on a week to date basis. And this week, we've seen some of the other private sector financial banks like an ICICI Bank outperform. Even Kotak Mahindra Bank has come in for some amount of buying. How are the valuations of HDFC Bank? I think it's now about 2+ times price to book value. How do the valuations stack up? And compare HDFC Bank versus what the other banks are likely to report.
Yeah, sure. So yes, HDFC Bank, while yes, it has lost a lot of gains, but if you look back, like last 1 month, the bank was continuously moving up. So we did see like a buying coming in, and from 1450, the stock moved up to almost 1750, and now we have seen some retracement to that. And I think the expectations around business growth will need to be continuously calibrated, because while on the last results call, management indicated that they don't really want to guide anything around business growth, but now seeing a sort of a weak start to the year with loan growth being negative Q on Q, one will need to again review the growth estimates. So as for us, we are like looking at a 12.5% loan growth in our numbers for FY25, and we're reviewing that alongside the results.
How much do you think the number could come down by? 12.5% loan growth estimate.
there is a possibility that it can come down by another 100 to 150 basis points, but it's not very easy to say because bank has indicated that it will want to grow at least closer to the system run rate. So maybe a few percentage point deviation is okay, but if the compulsions around CD ratio and the bank's own intent to make this ratio move a lot much in favor in a rapid way comes through, then you will see a slower growth also. That is not ruled out. So which is where something that we have to watch out. But besides this ratio, if you look at the other progress that the bank is making around the composition of loan book, that decline has happened mainly from corporate. The rest of the segments, be it retail or the other segments, CRB, they have all grown on a sequential basis. So which is where the implication of this on the profitability will still be limited. But yes, on the growth part, HDFC Bank is looking to have a slower growth versus the other leading private banks in the initial years.
Is there a possibility that this weak deposit momentum seen in HDFC Bank could be seen with the other large banks too? And what have you made of the Q1 updates that we've got so far?
Yeah, so I will say that while yes, Q1 is seasonally a weak quarter, and you will see therefore more like a range-bound growth in deposits, but we are not building in a flattish deposit numbers for other private banks. HDFC may be still a case wherein Q4 was very, very strong. You had a very strong current account built up, and that has led to somewhat of this fall on a Q-on-Q basis. If you look at on an average basis that the management has mentioned in the press release, there is still a reasonable growth on a average deposit basis for the quarter to quarter. But other banks, if you look at who have come up with a business update, Federal has already reported a very good number, 5% plus Q-on-Q deposit growth. And even for other banks like ICICI or Axis, we are building in a somewhat growth, a reasonable growth to come through on a sequential basis. So we will still think that HDFC Bank numbers are more like a one-off and not a representation for how we are expecting for the other banks.
What about an RBL bank? Bandhan Bank has also lost ground this entire week. You've got PNB, the first amongst the few PSU banks which have come out with a Q1 update. What are the key trends?
So overall business growth trajectory, I will say, is on the lending side relatively better, I will say, with Federal Bank reporting a 5% plus growth, PNB reporting a very strong 5% Q-on-Q advances growth. You compare it to what the bank guides for the full year, they have achieved almost half the target this quarter itself of that. So it's a very good start to the year from PNB. And RBL, slightly slower start on the advances, but 3% Q-on-Q growth in advances and slight decline in deposits is what they have reported. And that again comes on the back of a very strong deposit growth that the bank reported in the fourth quarter. So we still believe that on a full year basis, bank is on track to report high teens growth in FY25 on the lending side. And Bandhan, I think while yes, the first Q is like a seasonal quarter and Bandhan is generally a little more vulnerable to that, given the nature of the business that they do. But the volatility in their business also has come down. So if you look at the loan book, actually has increased a bit, like 0.7% Q-on-Q this quarter. Otherwise, usually it's a decline in the first quarter for Bandhan. So that's not such a bad outcome, at least on the lending side. And we are looking at again high teens growth from Bandhan also to come through in the year.
So your top picks are ICICI Bank, HDFC Bank, State Bank of India, and Federal Bank, right? These are the top 4 recommendations in the banking pack.
Yes.
If you had to recommend one, where is it that you see maximum upside?
So ICICI Bank certainly is like a bank of choice at this moment, and the bank has been performing well over the years. It is one of the best positioned bank when it comes to CD ratio and the way they are poised for growth, wherein we are estimating the high teens growth to continue almost to the tune of 17.5-18% CAGR growth over 25 and 26. And in context to that, the valuations still look very attractive overall. So we continue to like ICICI as a top choice in the sector.
And is Bajaj Finance a company that you look at?
Yes, we cover that. And my colleague, of course, covers Bajaj Finance within the NBFC space.
So your colleague collects. All right.
Yes.
Got it. Thank you, Nitin, for joining in and throwing light on what's happened with the banking sector this week. We need to slip into a very short break. On the other side, we'll get you more on the market. Stay tuned. Welcome back. Trying to get to the flat line now. The Nifty is just down close to about 9 points. Stocks contributing on the way up are ONGC, the top Nifty gainer, 3.5% up move, benefiting from the rise in crude prices. pharma has been the sector of the week. The Nifty Pharma Index has been gaining for 6 straight sessions today as well. The Nifty Pharma Index is a 1.5% up move, and the stock which is racing ahead is Sun Pharma. Pull up a Sun Pharma and you would see the stock is up close to about 1%, but spiking up in the last 30 minutes. FMCG names too are coming in for some amount of buying. That sector rotation continues. So ITC is a smart mover. Nestle's got a gain approaching nearly 1%, and Wipro. Wipro has seen some big bets by brokerages. There was a CLSA double upgrade. IFL upgraded the stock. They all believe that there is some promise in the numbers. Things will start turning around under the new CEO, and the valuations cushioned the downside relative to peers. So Wipro too has seen some buying interest. But we leave the markets absolutely flat on the Nifty. It's recovered from the day's low in the last 30 minutes. The mid-cap index is holding up in the green with a gain of close to about 0.5%. Halftime report is up next. Thank you for watching this show.